Hello, my name is Mehrun Etebari. I'm a senior principal analyst with S&P Global Energy, focusing on global LNG markets. And today I'm going to be talking about the massive buildup in LNG export capacity we're seeing in the global market in the coming years. Now, if we take a look at the global LNG market, it's reasonable to say that we are at a turning point right now. We're close to the end of a tight market period of higher prices that peaked in 2022 when Russian pipeline flows to Europe fell quickly after the invasion of Ukraine. That in turn rapidly increased European demand for LNG in particular, which squeezed the global market and pushed prices upward. But a supply response to that crisis has taken time. Liquefaction plants usually take around 4 or more years to build, so even though the tight market of 2022 helped spur new final investment decisions, or FIDs, it takes some time to see the response in the overall market. So now we are seeing a combination of new supply coming online from earlier FIDs, as well as from the wave of investment that was unlocked by the Ukraine crisis. Now, the overall impact is significant additions of new supply to the market. Just over 2025, 2026, and 2027, we're seeing around 7 to 10% year-over-year growth in liquefaction capacity globally being added to the market just from these new projects. But on top of that, we're seeing additions later on in the decade that will be led by the United States and Qatar. We will see a vastly larger market by around 2030 in terms of overall LNG supply. And in particular, new liquefaction investments in the United States have soared this year. A record level of US-based FIDs, nearly 60 million tons per year in US-based liquefaction capacity, which amounts to well over 10% of the size of all global existing capacity, has already been reached in 2025. Now, all of this investment has been driven by strong contracting, that is, buyers signing on to long-term contracts to secure supply from these projects, as well as a much more favorable policy environment to liquefaction projects in the United States under the Trump administration. In all, there is enough new liquefaction capacity under construction today globally to increase export capacity by 45% over the next several years. And there are likely further FIDs to come in the near term in both the United States and elsewhere. So, we expect that this wave of supply will outpace structural demand growth, and this will drive LNG prices downward. There is concern that, particularly during the summer months when global spot prices are typically at their lowest, it could become uneconomical to produce marginal volumes of LNG at certain projects, primarily in the United States. And in that case, we will need to see underutilization triggered by those price dynamics in order to balance the market. And potentially this could be a recurring situation over multiple years if the oversupply is large enough. But in our view, a big question will be how much the market could also be balanced by price-sensitive demand, especially in growth markets in Asia. This price-sensitive demand is driven by fuel switching between LNG and competing fuels, or other sources of natural gas, such as pipeline supply or domestic production. Some of this switching will be based on temporary dynamics, but in the long term, expected gas prices can also influence capital allocation decisions and effectively create more structural demand. For example, if we see the market viewing prices as being lower for longer due to this coming wave of massive new LNG supply, this can influence new gas-fired power stations to be built instead of coal plants, or it could influence industrial facilities to be built with gas boilers, and could drive the development of new LNG import and gas transportation infrastructure. Of course, it's worth remembering that a surge in demand could also create bottlenecks and raise costs in building gas turbines and other gas-related infrastructure, which could slow down this shift towards higher gas demand. So the response to the wave of new supply will be a complex process globally with quite a bit of uncertainty. Now, thank you for joining us for this session, and don't forget that we have extensive analysis and forecasting on the new wave of LNG supply, as well as the demand response to that wave, available on all of our S&P Global Energy platforms. Thank you very much, and have a great day.